In this video, a report from Binance Institutional research on where the industry right now is fundamentally in terms of usage statistics, where users are, where the money is flowing. So this is going to be great data on fundamentally where crypto is right now in relation to where we've seen the price bounce over the last few weeks and momentum taking up. I'll leave timestamps for everything down in the description below. Crypto has seen a very nice bounce recently in price momentum, but is that following fundamentals? We can see right here that this is a momentum indicator showing the momentum really is coming away from this downtrend up into some sort of upward and bullish momentum here. That's for the price anyway. We're seeing on-chain data actually come through with some bullish momentum as well. We've seen a huge, spike up from the bear market low. We're just coming off this now, and will, actual fundamental momentum, see us move forward, or are we going to get a big pullback because momentum's coming out of the industry? We'll look at that through the Binance research. If you are a trader, make sure to get a deposit bonus on Bybit. Trade with me on there, up to $4,000 deposit bonus if you trade futures there. Other trading bonuses as well. Check it via the link in the description below. Binance Institutional get data from all of the different crypto sectors, and we can look at which crypto sectors are actually growing and then where the value is going to flow from them. So look at Bitcoin first. The price has declined in Q4, yes, but we've seen huge macro momentum push us definitely off these lows right here and more into bullish momentum. Something, as you can see though, and I'll check this throughout the end of the video. The end of the video has a great piece of data from Coinbase, which is showing you the velocity of all of these blockchains, tokens. It's very, very good. So check that at the end. But in terms of BTC, balance on exchanges, as you can see, is really flowing off. Now, when people are scared about what's happening on centralized exchanges, they pull off all of their Bitcoin off the blockchain into their own wallets. That's great to have people using the wallet, but it actually really isn't that great. What we really want is an industry that's healthy and structured well and regulated where it needs to be, so that there's safety in place for people to actually trust the institutions they're using, because not everyone is going to use a wallet and go off grid. Most people don't want to do that, or just don't have the capacity to. And so we need trust in the institutions that are there to make sure that they're not going to do anything. So this is good that actually crypto gives you that option to take off. But in reality, what we really want is an industry that's trustworthy, and there are going to be centralized players. And this is just taking that velocity out of Bitcoin and saying, okay, I'll take it to my wallet and I'll store it. That's not great. What you want is velocity. You want people doing things. Activity is where value accrues. So this is great that Bitcoin can do this. But for the industry, that was a symptom of essentially untrustworthiness. And it's our, as an industry, we need to build that trust back over this year. Ethereum's transaction fees have plummeted. This is both good and bad news, mostly good news though. As we can see here, average transaction fees in Q4 were around $2.70. So a long way away from the crazy gas fees people were paying back in the bull market, the previous bull market, like $15, $30. A couple of reasons for this. Firstly, activity is down, yes. The second one though is that, Ethereum went through a few upgrades, including EIP 1559, which essentially, it didn't reduce gas fees, but it made the gas market much more predictable. And so both of those have led to lower fees. There's a third reason, which is actually positive in my opinion, which is a decline in block space as layer 2 solutions have taken hold. Arbitrum and Optimism, I've gone through this in many different videos, are growing significantly. They're growing in users, activity, daily transactions. Now that's good because these are scaling layers on top of Ethereum. So, rather than everyone using the base layer on Ethereum, people are now using layer 2s. They can take a bunch of transactions. So they can, let's say they bundle up 1,000 transactions all into one, and they just post that onto the Ethereum main layer 1 layer, all as one transaction. And so you're getting scaling. And so yes, there are fewer transactions on ETH, but they are moving to layer 2. And that means you can grow your audience, you can grow your use cases, you can go into gaming, more DeFi use cases, you can attract more people because the fees are lower. And so even though fees are coming down on the base layer, I wouldn't say this is necessarily bad news. It's actually good news and showing that ETH is scaling. And Ethereum really has to be money and a kind of collateral that doesn't inflate away, and that's what it's moving to. So this is actually mostly good news for ETH. Before we get into the next section, the Crypto Investor course has been updated with my latest updates. As you can see here, all people in the course already, this is completely free for you. The price is going up at 12 p.m. on Saturday evening, Dubai time though. So if you want to get the old price, make sure to check the link before that time. Ethereum staking is getting whacked by regulators right now. We've seen the SEC recently fine Kraken, not great news. That's for centralized entities though, offering staking products. If you run a validator, an ETH validator at home, you're in no trouble here. You're still going to be getting ETH rewards, but not everyone does that. In fact, most people don't. And so this whole thing, this regulatory kind of headwind on ETH about, is ETH staking a security? Like, is that product a security? Centralized exchange is going to get kind of taken over the coals. Can you move to liquid staking derivatives like Lido staked ETH? They're probably going to be under scrutiny at some point. They'll take market share short term. So this whole regulation thing is basically a big mess. But in the midst of that, ETH is now a profitable protocol. It pays real yield, which is why you're seeing more and more people staking this. As you can see, the cumulative stake for ETH is going up because ETH pays around 4% yield right now. And that is real yield, no inflation. That's from transaction fees. And so the regulatory headwinds are unfortunate, especially if you're in the US. If you're outside the US, it's kind of really not much bother to you anyway. But if you're in the US, it's just becoming a little bit harder. And so not great for the price of ETH short term, but I'm sure this stuff gets sorted out in the long run. DeFi will come under regulatory scrutiny as well, in my opinion, big time, because DeFi, or just finance in general, has regulation, a ton of regulation for a lot of reasons. As you can see here, DeFi is, still kind of downtrending in terms of TVL. I hate the metric, TVL, total value locked. It's not a great metric, but it is what it is. We have to look at it because we can compare it evenly across chains. Q4 minus 27 fall in DeFi TVL. Ethereum is still the major dominant player here, and even with a lot of competitors, it's not losing market share. So as you can see, Ethereum is kind of keeping its market share here in the bear market despite many competitors. And remember, Arbitrum and Optimism, Polygon, we could kind of think of mostly as ETH layer 2 anyway. So they have 60% market share, as you can see right here. So still incredibly dominant despite competition. If we look at the applications that most people are using as well, these are Ethereum applications: Lido, Maker, Aave Curve, Uniswap, Convex. These are kind of ETH first. They do deploy on other chains just because why not? But for the most part, these are ETH applications. And, we've yet to see a real competitor with a bunch of apps really try and take a charge at Ethereum. It just looks like it is kind of the industry standard still. Ethereum is still dominant in NFT volume as well. Whilst I don't invest in NFTs specifically, it's the token that accrues the value for me, because NFT activity means gas fees being paid. Gas means staking rewards and token burns on Ethereum, which is that value accrual for the Ethereum token. So you can see Ethereum has actually taken back market share from Solana here. Solana got caught up in the whole FTX thing, big sell-off. People were worried there. And so as you can see, Ethereum as seemingly a more trustworthy, more reliable blockchain without the FTX tie-ups, gaining market share here. Now, NFTs are important for me. You can see that NFT transactions have held up really, really well, despite the massive drawdown, 25% drawdown, which isn't unheard of. It's not really that big. Why is that? Well, I think because social tokens or NFTs can just be an industry that doesn't solely have to rely on, price speculation. So if we look at this, profile pictures, memberships, POAPs, utilities like Ethereum name service, these are activities and utilities that don't just require price speculation and prices to be going up to actually be worth something, like a meme coin, right? So they actually have a useful industry and industrial utility use case that can sustain some fees being paid and a business that's actually good, that doesn't rely on price up only. So this is a really great piece of the market. Whilst I'm not massively into speculating on NFTs, I understand that this activity is really useful as a utility. It's going to grow massively over the next few years, and that value can accrue by them paying fees on the Ethereum blockchain, and then Ethereum bringing some of those fees back to investors through staking and token burns. Gaming is getting bigger as well. And again, it doesn't rely on price up only. It's an activity that can pay fees and it doesn't require a massive bull market like a meme coin. We can see here the biggest chain by gaming is actually BNB chain in terms of the amount of users. The top three here are BNB chain, Polygon, and Ethereum. So as we can see here, Polygon is smaller than BNB. Now I know from reading Polygon, the latest updates there, they're focusing heavily on gaming in 2023. They want it to be the number one chain by the amount of users playing games on there. Again, Polygon as a gaming chain, gaming is a massive industry, huge industry that doesn't require up only to actually have users. And those users use the blockchain, pay fees, pay some fees that down to the Matic token. Matic, if it's going to be allowed to on Ethereum, obviously helps Ethereum as well. Matic has other chains as well. And so, yeah, BNB chain and Polygon, these low cost blockchains have this gaming utility use case, which can actually grow fees and be, a fee driver without prices up only. So even though, again, I don't want to invest in game tokens, it's the underlying blockchains that can accrue value here for me. We can also see the amount of games in development. So we know that this part of the industry is going to grow massively, and that's good for the underlying blockchains that support these games. So 20% of all games, according to BNB anyway, or Binance research, are in development. You have 16% in beta production and another 24% in alpha and pre-sale right now. So, only 30% are actually live. So there's a big chunk right here of games that are going to be coming over the next year or few years that can drive users into those blockchains. And so I think this is a big use case and can bring in people that aren't just speculating on coins going up in value. Another great data point here is from Coinbase Institutional, which is this. This is actually a fundamental measure that they use to value blockchains. And you can see this here. I posted this in the private Discord groups recently, a great amount of data right here. So let's go over some of the key points. Firstly, monthly return has been great over the past 4-6 weeks because of the macro. Great, but we might have a pullback here, but what we really want to look at is fundamentals, right, to make investment decisions. You can see inflation is really important. The more inflation that a token has, the more growth it needs to pay for that inflation and start to rise in value. 1.8% for Bitcoin is a tiny amount, of course, but the nominal dollar amount is very, very high still. So you need a lot in terms of a nominal amount of dollars buying the token to pay for that inflation, but each halving brings that down. ADA very small as well. Now what you can see here is that a few coins are actually deflationary: ETH, BNB, and Tron. Deflationary because you have a blockchain that has the use cases, people pay fees on the blockchain, and then it uses some of those fees to either burn tokens, which is like a share buyback, or pay dividends. And so that's an investment, fundamental investment that you can make in a profitable thing called a blockchain. BNB is by far and away the most deflationary. It uses a lot of those tokens to burn back BNB token, returning value to BNB holders. So you're getting a 15% return just from the fact that people are paying fees, and they're getting, is like the protocol is like a marginal buyer of the token. So that's why BNB seems to outperform, and people were like, well, why I don't hold BNB? Why does it outperform? It's a profitable blockchain that has a lot of users outside of the US. And so that's the fundamental reason why the value keeps outperforming a lot of other tokens. We also have velocity here. So you have to look at each token specifically. BTC has a fairly low velocity, and it's actually come down a bit recently because of people taking their tokens out and just storing them. But again, a store of value probably doesn't have the highest velocity. ADA is very high right here because DeFi has just launched on ADA. And so you have lending protocols, you have a stable coin that just launched. People are doing stuff with their ADA a lot more right now. And so that has a very high velocity, which is showing a high level of activity. What we want though is market cap divided by wallet. So this is something that Coinbase call an equivalence of measure of Metcalfe's law, which is the network adoption model, which defines value in proportion to the number of users in a network. Higher percentages may suggest that the value of the network may be outpacing the actual network usage. So higher percentages may not be amazing. So if we look at these percentages, you have 9% here for BNB. So what this is saying is the actual fundamental usage of BNB is it's undervalued in comparison to its market cap, essentially miles away. Now, many reasons for that. Maybe it's a centralization aspect, right? And so people don't want to put as much into Ethereum or something like that. But you can see Ethereum is valued very highly in relation to its network adoption model, overvalued, maybe because people think that it's, the bigger player. They don't want the specific risk of BNB, which they see as potentially falling foul of regulators, more centralized, right? So wow dot as well, as you can see, right? Network usage is tiny, like compared to the value of it, compared to this anyway. And so, yeah, we can definitely look at these and see, which are over and undervalued. BTC is actually pretty decent as well, but, BNB stands out. Now, that's not to say that it's going to be undervalued and explode in value, because there are risks associated with it, BNB potentially. So it's just good to, it's interesting to see that BNB is so unbelievably profitable as a blockchain and as an investment, but people actually value it much lower in comparison to its usage, because maybe they're looking at Bitcoin and Ethereum as, the more safer bets. And so they're paying more for them in comparison to network usage. Get the Bybit deposit bonus via the link below, and the crypto investor course price is going up tomorrow as the update has already occurred. Check the old price for the next day though if you are interested. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.